Hello guys. India's Union Budget was presented by Finance Minister Nirmala Sitharaman on February 1st, 2022. So I'll have to present or mention few highlights of the same. So a Union Budget is primarily the estimates of expenditure versus receipts of the government. In public financing, the spending is first decided, then the receipts are taken into account. It is unlike the corporate financing part. Total expenditure. So the total expenditure for budget estimate FY23 is rupees 39.4 lakh crores compared to rupees 37.7 lakh crores in the revised estimate of FY22. So there is an increase in the same. GDP growth of 8 to 8.5% estimated in FY22. It is after a negative growth of minus 7.5% in FY21. Supply side measures were seen in the budget with a push for infrastructure. Capital expenditure has been increased from rupees 6 lakh crores to rupees 7.5 lakh crores. So 6 lakh crores was in the revised estimate of FY22. PM Gati Shakti project has been announced for growth to be driven by 7 engines of economy: roads, railways, airports, ports, mass transport, waterways, logistics infrastructure. Education sees increased budget. External borrowing has been reduced on the back of increased forex reserves. Fiscal deficit target is estimated to come down to 6.5%, and a goal of 4.5% is set to be achieved by the year 25-26. National Tele-Mental Health program has been announced. MSMEs get raise in Emergency Credit Line Guarantee Scheme, ECLGS cover, and rupees 6,000 crore outlay for MSME performance improvement over a period of 5 years. However, the budget has some concerns as well. There is no tax structure changes as such, leaving the middle class disappointed. Crypto investors are dejected due to basically cryptocurrency investors. So they are dejected due to 30% flat tax in the transactions, along with 1% of TDS. Health is deprioritized as such, assuming end of pandemic, with 0.8% increase in allocation over last year's revised estimates. Subsidies are reduced in the following: food, petroleum, and fertilizer. No demand side measures seen like fiscal stimulus or universal basic income. Inflation CPI or consumer price index and WPI or wholesale price index is high. Okay. Rising input costs and soaring crude oil prices, okay, are affecting the economy. Rural development sees decrease in expenditure. It is surprising given the brunt of the pandemic faced by the poor. Fiscal deficit is rupees 16,61,196, which is 6.4% of GDP. It will be covered by market borrowings. Disinvestment receipts are lowered. Then the general trend of this budget is increase in tax revenue and decrease in non-tax revenue. Then as far as receipts are concerned, there is increase in debt receipts followed by decrease in non-debt receipts. GST could have been reformed by a proposal to simplify tax rates. Record GST collection of rupees 1.41 lakh crore in the month of January could be seen, but that could be partly due to high inflation. High input costs affecting investment along with weakened demand is not addressed well in the budget. So few comments on the budget with further analysis. Instead of farm income, which was supposed to be double this year as compared to that in 2016, the total expenditure has doubled in the FY23 budget. That is 39.4 lakh crores of rupees, vis-a-vis FY17 budget, that is 19.7 lakh crores of rupees. Much could have been done for MSMEs and the poor. Guaranteed cover in emergency credit line guarantee scheme, which was mentioned earlier, has been raised to rupees 5 lakh crores till March 2023. But with the banks not willing to lend much to large corporates, also concerns are raised about their attitude towards MSMEs. MSMEs don't get relief in the form of stimulus or any proposals for GST changes. Also, no lowering of cost of capital, no change in the assessment method of working capital, supply chain disruptions in manufacturing, MSMEs not being addressed. So these are all the concerns as with regards to MSMEs. So demand side measures shouldn't have been sidelined. It had to be in tandem with the supply side measures. Crypto tax by itself not counterintuitive, but the rate could have been lower. Health should not have been deprioritized, irrespective of whether the pandemic will be over this year or not. Capital expenditure growth of 25% from rupees 6 lakh crores in revised estimate FY22 to rupees 7.5 lakh crores in budget estimate FY23. So good for the infrastructure, but weak demand might discourage investors to invest in the first place. Also, 90% of business is by MSMEs, which might not get immediate relief from the capex, which will be largely beneficial to the capex will be largely beneficial to the large corporates. Focus on mental health is a good step, is a positive step. Then rural development expenditure should have at least remained the same, but it is decreased by rupees 653 crores as compared to revised estimate in FY22. Budget structure is aligning more towards growth with some fiscal consolidation, but supply side measures may not be effective in the short term, as short term relief is the need of the hour post the pandemic. It was a mixed budget, but hope the next one is better. Thank you.